Thank God it's Friday. Welcome to 55 minutes of relevant and current business conversations, and it only happens here. Business Morning on Channels Television. I'm Ini John Mekwa. Let's start off with oil prices. It slipped in early Asian trade today as U.S. crude and gasoline inventories jumped, while Saudi Arabia and Washington continue to clash over plans by OPEC Plus to slash production. Brent crude futures fell 15 cents to $94.42 a barrel, while U.S. West Texas Intermediate crude futures was down 21 cents at $88.90 a barrel. A larger than expected surge in U.S. crude oil in storage, along with a rise in gasoline stocks, weighed on oil prices. Crude inventories grew by 9.9 million barrels in the week to October the 7th to 439.1 million barrels. Gasoline stocks jumped by 2 million barrels in the week to 209.5 million barrels compared with what analysts expected at 1.8 million barrels drop. Well, keeping prices from falling further was a steep drawdown on distillate stocks that came as heating oil demand is expected to rise as winter approaches. Meanwhile, Saudi Arabia and the United States are still on that matter, clashing over decision of OPEC Plus to cut oil production. Staying in the market now, but going to the commodities market, we see Malaysian palm oil futures bounce back on Friday, lifted by a weaker ringgit and gains in rival soy oil, although the contract was set for a weekly loss. The benchmark palm oil contract for December delivery on Bursa Malaysia Derivatives Exchange gained 138 ringgit, and that's about 3.77% to 3,803 ringgit, and that's about $809.87 a ton in early trade. The contract fell 1.9% on Thursday. For the week, palm oil has declined by 1% so far. Looking at the fundamentals, India's palm oil imports in September jumped to their highest in a year, boosted by strong demand ahead of the peak festival season and a steep discount to rival oils. The Solvents Extractors Association of Nigeria disclosed this earlier. Still staying on that commodities space, but now we're looking at wheat. Chicago wheat rose for a second day on Friday, eyeing a positive weekly finish as supply concerns from the Black Sea region surfaced after Moscow said it was prepared to reject renewing its export corridor deal unless its demands were addressed. Soybeans and corn eased, although both markets were on track for weekly gains, underpinned by expectations of lower U.S. harvest. Russia threatened not to renew the Black Sea Safe Passage Agreement, which is set to expire next month, November. And then we come to Nigeria. And here we see the Manufacturers Association of Nigeria Export Promotion Group. They've been highlighting the need to promote non-oil export for sustainable development and job creation. The latest conversation was at the group's 5th annual general meeting in Lagos, which had the Minister of Industry, Trade and Investment, Mr. Deni Adebayo, in attendance. Mr. Adebayo, who spoke on the sidelines of the meeting, promises ease in Nigeria's export process and that in the next few months, a scheme will be released to that effect.
Well, government is already working on mitigating the problems associated with export. We are looking at various options, and within the next few months, we will come up with a scheme that would make it easier for people to export their goods from the country. And rather than export raw materials, they should actually add value before export. And right now, the focus of the Central Bank of Nigeria is a situation whereby, because of the shortage of foreign exchange, the Central Bank of Nigeria gives priority to people who are importing machinery that utilize local raw materials. So the major focus of government right now is to add value to our exports before we export. And the whole idea is to stop exporting jobs. If we, rather than export raw materials, if we if they're processed here, it gives us an opportunity for more employment in the country.
Well, let's leave that non-oil exports. We'll get back to it in a couple of minutes. But first of all, let's talk about this burning issue of oil theft. And we've seen a lot of revelations in the last couple of days. In the media, we've been awash. We've had a correspondent do some rounds in those areas with the NNPC Limited and those security forces or agents privately owned that have been employed to do that. We've heard stories of arrests of members of suspected crude syndicates. We've seen discovery of illegal pipelines and other issues. But I guess the question will be, will this save the $700 million monthly, which the NNPC Limited says the country loses to oil theft? Well, to help us understand, at least we need somebody who knows some of those intricacies in there, is Mr. Dakuku Peterside, former Director General of Nigerian Maritime Administration and Safety Agency, NIMASA. Good morning, Mr. Peterside. Thank you so much for your time this morning.
Good morning.
Yeah. So I'm sure you've been following the media. You've seen the stories, you've seen the arrests, you've seen the allegations, you've seen the pipelines, the one that's been existing for 9 years or more. First of all, are you shocked with these revelations?
Well, I wouldn't say I'm shocked with these revelations. You recall that this issue of crude oil theft has been on for quite some time. I know it's been on for not less than 20 years. But what we're talking about now is the intensity and the degree. The volume of oil we're losing of late is embarrassing. NPC and other stakeholders have put it between 200,000 barrels per day and 200 and 400,000 barrels per day. And that is totally unacceptable. That has had serious impact on our economy, and particularly in the area of investment. You have seen that a number of oil majors are selling off their assets, especially their not deep land and offshore assets. You've also noticed that even the marginal fuel, the guys who got marginal fuels are refusing to develop it or make substantial investment. In fact, most investors have lost confidence in the Nigerian oil and gas space. They are challenged in all dimensions. You've also seen the fact that new investments are not coming in. These are all consequences or results of crude oil theft. Not to talk about the fact that cost of operation is all-time high, and it has an impact on the economy. So I think that from every dimension, we're challenged as a people.
So I guess these revelations should be celebrated, but then I mean, for someone like me, I'm kind of skeptical, because then what should we do with all of this information that is coming out in the open to ensure that in the next 5 years, we don't come back and say, oh, this pipeline has been used for oil theft, has been in use for 5 years or so. What should we be doing with this information?
Well, thank God for the revelations, and thank God for a new approach. For me, it's a cocktail of solutions. One is the fact that it's inevitable that at some point there will have to be military actions. That has failed in the past because of compromise at various levels of our military. Now, the other thing is the fact that we must put stringent laws in place to punish those who are caught in the act or those who get involved in crude oil stealing. Then there's also the policy dimension. But most importantly, some other dimension to it is that as a nation, we need to declare an emergency in this area. Devote more than enough time to deal with it. I've talked about military operation. I've talked about putting stringent laws in place. I've talked about deployment of technology to monitor oil and gas from the point of production to the various terminals, including surveillance of pipelines. So there are multiple options. We need to look at what did other nations do to tackle the issue of oil theft. But there's also another dimension that, look, even the guys who are involved in whether operation or regulation, there's some level of complicity. We need to investigate that and find out if there is any truth in it. This is crippling our economy. It's something that we need to apply everything at our disposal. It's not something we can continue to neglect. It's not something we can continue to. We need to treat it as a major national economic challenge and, if possible, economic sabotage, and it requires severe punishment. So I think that these are some of my thoughts on how to tackle crude oil theft. But again, we need to rely heavily on technology.
Yeah, but Mr. Peterson, I think that maybe what makes us different from other countries who may have faced a similar situation is the talks of people in places of authority being involved. We've heard stories of how officers would, even pay some money to their superiors to be sent to those areas because they've been seen as being lucrative. And those people in authority may also be benefiting from it. So where is the willpower to actually fight it if it's being beneficial to a handful of people?
Well, I had mentioned that clearly from inception, that the most important thing we need to fight crude oil theft is the political will. Now, the political will comes in different dimensions. I had also mentioned military action is inevitable, military action. But in military action, we have to fish out the bad elements in the military. It's Nigerian society. It's a reflection of what's happening in the larger Nigerian society. We need to fish them out and ensure we send military officers that are upright, military officers that are patriotic, those who will not compromise. But like I said earlier, it's a cocktail of solutions. So not just military action, we also need to engage with the communities. Now, all of these things take place within the precincts of various communities. If the communities own the assets and they feel that they are stakeholders, it might be difficult for these crude oil theft operators to operate. So we must get the buy-in of the community, exercise enough political will, put legal framework in place, a bit of military action. Then there is also compromise on the side of those who regulate or oversight our oil and gas installations. It's criminality. Criminality is usually not very easy to tackle in any society, as is no exception. But just like you said, I totally agree with you that we need firm political will to tackle this issue of crude oil theft. Like I said earlier, it has totally crippled our economy. You can see our debt profile. You can see the rate of inflation. You can see the price of commodities. You can see all of them are linked to the fact that we are suffering from fiscal economic deficits.
Yeah, but these ideas and suggestions you have made, do you see it being carried out by the current administration? You know, we're in transition as it is, as a nation. Do you see it in this administration, or is there something this administration can do to ensure that the next administration follows up with whatever it starts?
Well, I've seen marginal improvement. Recall that in August, our production was below 1 million barrels. By the end of September, we've gone up a bit to 1.1, 1.2 million barrels. That's marginal improvement. We hope that we'll continue in that trajectory. And I think that it has to do with a number of interventions. Intervention number one is that government engaged the military in a different format, in a different framework. The chief of naval staff, you heard him when he engaged with the media and said, look, he doesn't believe that we'll lose as much as 400,000 barrels per day, and that will require a number of tankers. That 400,000 barrels is not small volume at all. He said it's not only the military people, there are compromises from different, and there's complexity from different dimensions. So the rules of engagement seems to have changed with the military. Now, there's also engagement of third party, what people like to call the Tompolo contract, whatever is the meaning of that. That may have also assisted. Then there's a new wave of community engagement, and there's some degree of seriousness and political will. So the current government has started, and I hope that they're able to
Recording in progress.
maintain the momentum.
All right, so you also talked about regaining the confidence of investors. First of all, I want to ask, we know that a lot of IOCs have left because of oil theft, vandalism, and all of that. Do we need to get them back, or should we work on local investors? Which one do you think would be more beneficial to Nigeria?
We need both the local investors and foreign investors. Now, the way it works is that if the local investors begin to exhibit confidence in your economy, others become interested. And so it's not just what we say or the things we promise to do. Let them begin to see some action. They will definitely come. There's a way investment works. It goes to where it will bring the best return. And so it's not just what we say. Let's put things in place. When we put those things in place, the foreign investors will see that things are working in Nigeria, things are changing. They will naturally be attracted to invest in our ecosystem. So it's not just about what we say. So whether they are local investors or foreign investors, we need the confidence of all parties. We need their commitment. We need them to be attracted to our ecosystem. And nothing can bring that confidence better than the actions government take and the fact that the environment is conducive for investment. For as long as the environment is not conducive for investment, nobody will put their funds here.
Okay, so you do think that just government trying to, or punishing, or following up on those revelations, I guess, punishing those who have been arrested and hopefully carry out investigation to the real owners, of this contract, that this will be enough to win back the confidence of investors?
It will help. If we successfully commence prosecution of those who are caught vandalizing pipelines for stealing crude oil, and we secure conviction, then people begin to realize that we're taking action. That is no longer business as usual, and it begins to show up confidence. So a number of actions need to be taken to show government seriousness and commitment to tackling the issue of oil theft and pipeline vandalism.
And you also talked about a new approach. You mentioned that earlier. What for you would be a new approach after these revelations?
Well, like I said earlier, one is the engagement of the communities. And I'm sorry to say this, if you notice, when our late President Yaradua came to power, oil production was all-time low. As he began to engage with the communities began to feel a sense of ownership and began to give cooperation. It showed up our production output. That was then. So community engagement still works. Now, two is deployment of technology. And it's available right now. There are also, whether it's surveillance technology, monitoring technology, every technology is available. Almost all the technologies are available that will help us secure our
Wow, seems we lost Mr. Peter's side. Okay, all right. Are you back? Can you hear me?
I am back.
Okay, all right. Go ahead, please. You were talking about community engagement, yes.
I've mentioned community engagement. I've mentioned proper deployment of technology is available. I've talked about the fact that, hello?
I can hear you. Go ahead, sir.
I talked about enforcement of existing laws is key. I don't think the challenge is lack of laws, but are we probably enforcing, the existing laws?
Sorry.
Are we arresting those who identify to have participated in crude oil stealing or tampering with pipelines? Do we have successful prosecution to deter others? That's a new approach, something we should take seriously. Now, intelligence gathering and investigation. Now, for every single incident, nobody should go scot-free. That will give a lot of confidence to the system. Every single incident, we must go to the root of the matter, arrest those who are involved, prosecute them publicly, convict them, and that will begin to deter others and show confidence in the system. These are some of the things I think that we can do differently.
All right, Mr. Peters, just before we let you go, the Deep Blue project, I think earlier this year, we did record some success when it comes to fighting piracy and all of that. And some people attributed it to the Deep Blue project. How successful or not has that project been so far?
Well, the Deep Blue project has contributed, as you can see, in reducing incidences of piracy. By the way, in the last 6 months, we've not had any case of successful piracy in Nigerian waters, thanks to the Nigerian Navy and Deep Blue project put in place by NIMASA. It's a new architecture. We're beginning to reap the fruit of that investment. But I don't think it's just the Deep Blue project alone. There are other factors that have contributed to the drastic reduction of piracy in Nigerian waters. We should sustain the tempo. We should try and investigate what works and what is not working well, the areas we can improve. I'm also aware that the Navy Falcon Eye has contributed substantially to improving the situation. Navy has upped their game in terms of patrol and surveillance. Then there are other stakeholders too that are playing one role or the other. So on the whole, we've seen that there is improvement in the area of maritime security in the country. And the country is a bit more focused right now in tackling the issue of crude oil theft because it's now had very severe impact on our economy. And I think that more than ever we're challenged. So our people now are forced to wake up from their slumber, show more political will in tackling not just maritime crime, but the issue of crude oil theft too.
All right, Mr. Dakuku Peter Side, former Director General, Nigerian Maritime Administration and Safety Agency. Thank you so much for your time this morning.
Thank you, too.
All right, I guess that issue of oil thefts will remain in the news for a bit. Thank God for the revelations, as Mr. Peterson has said. But what do we do with that information? That's the next step. We'll follow up on that. And we'll certainly bring it to you here on Business Morning on Channels Television. For now, let's take a breather. When we come back, we'll head back to the non-oil sector and see what the exporters are doing. Welcome back. Well, yesterday, the Manufacturers Association Export Promotion Group had its 5th annual general meeting. After the meeting, I caught up with the outgoing chairman, Chief Ede Dafione, and I had a chat with him on some of the impact of the policies, some of the government policies to boost non-oil exports in the country, and how business is for them as exporters.
The government side, through the Nigerian Export Promotion Council, the most successful of the incentives for the non-oil exporters has been the EEG, or Export Expansion Grant. That policy has recorded visible successes in the increase in non-oil exports. So if you take a graph of the years where the EEG is being paid, and you match it against the non-oil export volumes in those years, you can see a complete relationship between the two. So very successful policy. Unfortunately, for several reasons, the policy has been interrupted significantly since about 2014. The government has recently, going back 4 years, 2018, paid a significant amount of the backlog at that time and is today, this month, processing an approval to pay a further backlog to bring it up to date at the National Assembly through promissory notes at the moment. The RT200 is a CBN policy that started early this year. Essentially, what the CBN is trying to do is to encourage exporters to sell their foreign exchange locally. That is, to increase the amount of foreign exchange that is available in the local market for importers to use to open letters of credit, etc. By fringe benefits, that also helps to encourage non-oil export, although the CBN's mission is to increase the inflows. But I should say also that by law, exporters have to repatriate at least 95% proceeds of the export anyway. So the exporters are compelled to bring back their proceeds whether or not there's a CBN incentive for that or not.
But some analysts have said that one threat to the RC200 is the gap between the parallel market and the official market when we talk about the pricing of FX in Nigeria.
I wouldn't say discouraging factor. Now, where exporters bring back their proceeds, they have to sell at the official CBN rate. I think that's about 4.20 or something today. Exporters who could bring back their funds and sell on the open market would be able to achieve something closer to 800. Now, going back about 3 or 4 years, exporters were given what the CBN termed unfettered access to the export proceeds. That is, they could sell them to whoever they wanted, however they wanted. It is only in recent years, I think about 3 years now, where the central bank has insisted that the proceeds must be sold through the I&E window at the official rate. And of course, where you are getting 400 odd naira for every dollar compared to nearly 800 that you could have earned if you had our previous unfettered access, that is a discouragement to export. So on the one hand, you have the NEPC trying to encourage non-oil exports. You have the CBN trying to encourage the repatriation of foreign proceeds. But just by giving unfettered access, that would solve both problems. So maybe that is where we should be going back to.
And it seems the talk about the hurdles that exporters have to face when it comes to the number of government agencies and insufficient infrastructure is still on.
Let me address two issues on that. The first is the cost of trucking exports into Lagos. So at a time and where the Apapa Road was in a terrible mess, it actually costs the same amount to move goods from Edo Delta State to Lagos as it did from Lagos to the port. And sometimes trailers would be on the road to the port from within Lagos for 6 weeks, 8 weeks. There was a whole batch of trucks that were stuck at one storage terminal within Lagos I had containers there for 4 months. And you're losing money, your customers are buying for just-in-time stocking. So, you know, where somebody orders their goods and expects them in February, you deliver them in March, April, May, June. The customer tells you he doesn't want the goods anymore. So that infrastructure, the roads going into the ports, needs to be managed a lot better. The second point on infrastructure I would mention is on the shipping lines. So the shipping lines are charging exporters rates that are not competitive worldwide. And there is nobody who is able to get any competition going that will enable them to bring down their prices. So at a point in time, the cost for stuffing and getting boxes on board is nearly much higher than the actual shipping of the goods. So the exporters are suffering an additional local cost that they should not have to bear. I don't know why those shipping companies would have that high cost, but that has to be regulated so that they can't group together and get a standard high cost where they're all making super profits at the expense of the exporters.
Who should deal with this?
Government. Ministry of Industries would be one. Ports Authority, another. There is government quango that deals with competition and prices also that could also look into that. I've mentioned that severally over the last year and a half or so because the costs are now astronomical and out of control.
And are you, as the Manufacturers Association of Nigeria, are you talking to the government about this?
The response on the pricing by the shipping companies has not been very good. We tend to deal with the bigger issues. So at the moment, the big elephant in the room is the export expansion grant, which is being processed as we speak. And so once that is through, we will then return back to the smaller issues. But they're all on the table. There's none of these issues that has not been brought to government's attention.
Well, this administration is very big on the ease of doing business. How much impact has that made on exports from your perspective?
At the beginning of the administration, we at MANEC held several interviews with the team from Ease of Doing Business. They had some consultants come in from abroad as well that we worked with. I believe the processes have eased a little bit, but this should be a continuous process.
And as Nigerians head to the polls in a couple of months, what is your expectation as an exporter? What would you like to see coming out from that polls? And what are you looking out for in the candidates as you would vote?
A quick, easy win for exporters would be unfettered access to their foreign exchange. That would increase the flow of dollars into the economy and also increase the ability of the exporters to trade based on the proceeds that they receive and they feed back into the system. Aside from that, infrastructure costs in terms of security and power especially need to be under control. The recent increase in the diesel costs have meant that a lot of factories are now producing only when there's NEPA. And sometimes that could be 1 day out of every 2, which is definitely uneconomic. But where you produce with diesel and you are going to make losses, then there's just no point in switching on the engines.
Well, getting into the mind of exporters at this time in the country, in the face of all that the country is facing. That was the outgoing chairman of Manufacturers Association of Nigeria Export Promotion Group, Mr. Ede Dafione, yesterday at the end of their 5th AGM in Lagos. So now let's head back to the markets, non-oil still, but the money market now. And Will Ibong is here. Will, how was the market yesterday?
You're talking about the fixed income or the equities market?
Equities is what I always ask about.
It closed.
The fixed income is not as liquid as
that. It closed lower as expected. Well, right now, you say you're getting to the minds of these exporters, and I'm thinking we should get into the minds of the investors at the NGX. Because you're wondering why
they're not buying the dip. They're supposed to be bargain hunting at this time.
I should be taking advantage.
Well, you need to get to the NGX to do something about this.
True. We'll do that. We're going to go get up with the fixed income market, where the bond market opened yesterday, still on a quiet note. Market participants are still cautious. Now, that's amidst the rising interest rate in that segment, in that space. Now, halfway through this session, we saw improved activities on the 2037 paper, which was quoted at 15.45%. Yields were still going high there, but investors are still cautious, as I mentioned earlier. Now, the Treasury bill secondary market traded with mixed sentiments. We saw participants, bids and offers across the mid to the long end of that curve. Still bearish sentiment, yields going up still, and then still skewed. Investors are more interested in the newly issued long end of that curve, which is at 12%. But we will look at the NTB auction which took place on Wednesday, and we'll see how that fared. But we're going to be talking to Chuka Nwachukwu, Group Head, Fixed Income at UBA, to give us more insights. Chuka, good morning. It's good to have you.
Good morning, Will. How are you?
Fine. Chuka, the DMO sold the lowest Treasury bills yet to date. Can you shed more light on that?
Okay, thank you. Like you rightly mentioned, on Wednesday was the MTB auction, where 190 billion was on offer, and then barely about 34 billion was sold. This is actually quite a surprise for us, the market players, because they didn't even sell up to half of what was on offer. Significant point again to note is that we saw about 100 basis point movement on the longer end of the curve, from 12% to 13%. And then this has driven the yield, like you said, movement in yield. We've seen increase in yield movement about 150 to 200 basis points on both end of the market. Let me quickly just speak on the bond section as well. The bond section as well was also slightly quiet. We've seen major activities on the 2037, like you mentioned, where we've seen a lot of activities on that end. This bond is also on auction on Monday.
Now, look, we're talking about the bond, and I was going to mention the auction. So let's cast a look into the near future, which is Monday. The DMO is offering 225 billion naira worth of bonds. What are your expectations for yields?
Okay, the expectation for yield is that yield will go. The last auction came out at 14.5. That's the longer end, came out at 14.5. And this is a bond that is currently trading at 15.35. And so we expect to see around 15.5, on the longer end at the auction. And, also another point to note, apart from the fact that the inflation is driving yield upward, is the illiquidity constraint we have in the system. And that's actually what has been pushing yield up, and then people are on the bearish end of the market.
So much, Chuka, for your insight on the program. Chuka Nwachukwu, Group Head, Fixed Income, UBA. Thanks for coming on. Now, so we move to the equities, where bearish sentiments continued in yesterday's trading session. The index was down 0.02%, though it was marginal, but it still had impact on the all-share index, which is still at 47,524 points. And the equity cap is still at 25 trillion naira mark there. Now, year-to-date gain, that's really what we're looking at, is now at 11.3%. Now, down from the 16% we started possibly this quarter with, but we're seeing 11% there now. Total volume traded decreased by 44% to about 86 million units of shares traded yesterday, valued at 2.09 billion naira, and deals 3,265. I said yesterday that it hit rocky waters. This was a sea of red for the activity chart yesterday. It's still very, very shaky for the NGX. Now, GTCO was the most traded stock by volume. It had 19.15 million units of its shares traded yesterday, while Alta Africa led the value chart with 923 million naira traded. Now, looking at sectors, we see banking and insurance indexes were higher yesterday. Banking, most liquid stock in here always says closed 0.93% higher, almost 1%, and consumer goods down. Insurance was up 0.022%. Consumer was down. Industrial goods did change from its figures that it closed on Wednesday, and then oil and gas was also down 0.07%, similar margin with the consumer goods index. Market breadth, however, was positive. That's a change because we saw 13 stocks gaining yesterday compared to 9 losers. Honeyflower, name it, recorded the highest gains for yesterday. We always have winners in the market, despite the fact that the market is still negative, while UAC and Nigeria and Geregu is no longer the toast of investors for now. We're seeing it losing on 9% yesterday, and they were on the top 3 for the losers chart yesterday. Now, we're hoping that the market rebounds. We saw the NASD index as the unlisted equities. It closed positive yesterday. If we can have the NASD index up there, we saw that the movement was positive compared to what we had for the NGX, 0.34%. The market cap gained about 3 billion naira yesterday to close at 958.19 billion naira. The index is still at 727.88 points. The market cap has not hit the 1 trillion naira level it usually stays at, but we are hoping that there's positive movement in that that counter and hoping that we investors, take advantage of this period, because this is the time to be an investor and not a speculator.
Well, I guess the liquidity has to be there first before you become an investor.
I think there's
and we know liquidity is very tight now. The CBN is working really hard to mop up all the liquidity in the environment.
And banks are even struggling. The banks are struggling. What of individuals?
Exactly. So if banks are struggling, what happens to individuals? All right, Will, thank you so much. We'll see what happens, how the market closes today.
Thank you.
At the close of trade. All right, we'll take a break now. When we come back, we'll head to London and hear what's going on there. We heard Mr. Kwasi Kwarteng might be in trouble. We'll get the details from Juliana in a moment. Welcome back. We'll head straight to London now, where Juliana is standing by, and I do know that she has a lot of hot details for us. Juliana, good morning. What are you guys doing to Mr. Kwasi Kwarteng? What are you doing to him?
I know, Innie, it's pretty shocking, isn't it? And every day there's just more unprecedented news. But we do know that Kwasi Kwarteng, the Chancellor, should be arriving in London right about now. He has shockingly exited the IMF meetings in Washington. He's left a couple of days early, and what we don't know yet is whether or not he was summoned back by Liz Truss, the Prime Minister, or he saw what was going on and all of that breaking news just about 24 hours ago and decided that if he wants to try and fight for his position, he better do it in London and not in Washington. This is all about the mini budget, which has been dubbed Maxi Shambles, not by me, but by senior Conservative MP David Davis. It's caused a complete turmoil in the markets. We saw the pound dip to the lowest it's been in decades against the dollar. And now Liz Truss's tenure is on the ropes. And we saw it in Birmingham during the Conservative conference, where she started pushing back from him, saying it wasn't me, it was him. And now, when he was in Washington, meeting with G7 finance ministers, trying to shore up international support that his growth policy would one day work, Conservative MPs rallied around the Prime Minister, saying that we must turn this around. So we think that's potentially what's going to happen. There isn't an announcement yet, but there are particular measures within that fiscal policy that not only has upset investors and has upset the public, but has deeply upset Conservative Party members who believe that Liz Truss and Kwasi Kwarteng completely turned their back against the establishment and what is supposed to be done to make some sort of statement, and it's backfired spectacularly. So yes, we'll just have to wait and see what happens. There has been some media commentary this morning. Greg Hands, he's the International Trade Minister, notably one of the only Rishi Sunak supporters within Cabinet, within Liz Truss's close circles. He has said that, the Prime Minister has complete confidence in Kwasi Kwarteng. But unfortunately, Innie, over the past few months, what we've seen with this Conservative government is they say one thing, looking square in the eye of the reporter, and they mean something else. Quite familiar with politics today, but yes, it's all a little bit of a mess. But let's just wait to see what happens when Kwasi arrives back in London and see if, he's Chancellor by the end of the day.
Yeah, certainly. It's. I think the UK has eyes at this time, especially for today, see how it comes and how all of that's on. But we also have Royal Mail in the news. We've been talking about them trying to adapt to, the new ways of doing things now. They are laying off 10,000 jobs. That's a lot.
It's a lot, and it's not great, especially at a time where the Communication Workers Union, who represent Royal Mail staff, have been striking. I believe they were striking on Tuesday. They were supposed to be striking again next week, Thursday. In fact, there are a series of strikes leading up to Christmas, including a strike on Black Friday. Has it backfired? It appears so, because we got that pretty shocking announcement by Royal Mail saying they're laying off 10,000 staff. All those 6,000 will be redundancies. It's just not great. They have been saying for quite a long time that they're losing up to £1 million a day. Nobody is sending letters anymore, most people are sending emails. They are trying to transition to becoming a package delivery service, but we know that's a really crowded market. It's very difficult to compete with the big guys such as Amazon and others. And they said that this year they're expecting to lose 350, potentially 450 million pounds, and they've got to lay off staff. So yes, it's going to be interesting to see what the CWU have to say in response to this. But there has been so much striking, and the reason why you do ballot, the reason why you do go out on the picket lines is to try and force what you want. And the last thing anybody wants when you do this is to lose your job. So yes, not great for Royal Mail staff, particularly if you're one of those 10,000 that would have received that really difficult letter at a time, no pun intended when I said letter, but at a time when we are going through a cost of living crisis, people are struggling to pay their bills, and now you won't have any salary at the end of the month. Yeah, pretty bitter.
Yeah, Julian, and not good times when we talk about the year of the squeezing harder on some people than others. Yeah. But we'll talk to you at 1:30. Laddie Williams will be here to talk to you then.
Yeah.
All right, then. So we have Laddie also walking into the set now with his crypto numbers and his crypto stories. Friday. Laddie, any good news?
You know what we normally say about Fridays, we expect red Fridays, but it's a green Friday.
Wow.
Yeah, even though we had that.
Am I shocked or what?
Yeah, you should be shocked.
Okay, I think the inflation numbers came out yesterday.
Hot.
Market reacted and recovered.
Recovered immediately.
Very short recovery.
Yeah. And we're seeing that 24 for extreme fear. Better than what we had yesterday, about 20 points. So it's 24 points we're seeing.
When are we going
100.
to leave 20s?
I'm hoping soon. at some point when the bulls.
See it soon.
or when inflation starts trending downward.
Exactly.
Maybe if that happens. Let's look at the market cap now. $941.63 billion, up 3.13%. And we see volume traded down 15.66%, even though we had that big jump yesterday after we got that CPI data. Bitcoin dominance, 40.34%. Let's look at the price of Bitcoin this morning. It got to about $19,793, up 3.84%. It did fall to about $18,300 yesterday before the CPI data came out. And we saw that quick bounce, even with the U.S. equities market there. Volume traded $49.90 billion. We see Ethereum, that wasn't left out. Ethereum also jumped yesterday about $1,325. Talking about the price of Ethereum. Volume traded for Ethereum there, $19.41 billion. We get that Ethereum price at some point. Let's look at the top alts by market cap now. We see it's all green on that count. Everything is up. But XRP is the biggest mover there, up 8.09% from that CPI data we got yesterday. We see XRP reacting bigger than other altcoins there. BNB there up 3.14%, $274.99. Let's bring in Gilbert Jopata now, financial market analyst, to bring us up to speed. Hello, Gilbert. Hello, Gilbert. Gilbert, can you hear me? All right, we'll try and get Gilbert again. And we see the top 5 gainers there. We see ENS there, Ethereum naming service there, is up 17.93%. This has not been going with the trend, of the market, but it's looking really good there, $19.54. Let's try and get Gilbert one more time. Hello, Gilbert.
Yeah, good morning.
Good morning, Gilbert. Happy Friday, and it's a green Friday. I'm sure you're excited.
Oh, yes, I am. We always love the green.
Yeah, we always love the green. Yeah, but it's quite interesting, before that CPI data came out, everything was going down. We saw Bitcoin drop to like $18,300, And I'm sure a lot of traders must have dumped, seeing everything going down. But the data came out and the market went up. What's happening?
The thing is, CPI data always validates the Fed's next course of action. So with yesterday's CPI number of about 8.2%, I see another 75 basis point hike on the horizon by November or more. On the micro, if you look at the micro, which has given us this increase, I think a lot of persons are going to be caught by the BS, because if you zoom out and wear a market sniper binocular lens and look at the market in the macro setup, the market is about adjusting to a bearish direction. So until we have a more stable market, on-chain analysis at this point is not something we should be focused on. All eyes should be on the Fed. The reason saying this is because it's like having a building and you're analyzing the building and yet the ground is shaky. So right now, to really anticipate market direction, we should be looking at the Fed, which is the structure, the ground, and not the building. So macro level, we are already adjusting to a bearish direction, despite the micro-term price upside.
And obviously, everybody's asking, is this going to be sustainable, this rally we're seeing? But obviously, we know the consensus out there. Everybody's still, looking down at this point. But let's look at, what are you looking at, right now in the market? I want to get your picks, because some say the bottom is close, some say it's still far away, but some are still dollar cost averaging, at this point. But what are you buying?
Okay, I still think we still have a more discount sale that is still going to come. But as unpopular as this may sound, there are assets that are more structured for a price performance and is going to outperform BTC on the short term. If you will let me put it into perspective, top of my list is the MetaNep token. This is a new project which is building it's a metaverse and NFT project. And it has done over 1,000% in the last 2 months, and it looks more structured for a price continuation. New project building in the bear market are known to increase rapidly, but beyond technicals, the community is growing and becoming strong, and there is continuous development going on. And there's also a plan to host international artists and even our local Nigerian artists in its metaverse. So I see the fundamental activity pushing more to more price surge and price action. Second on my list is the XRP. The court case, the over 2 years court case is coming into a close very soon. So this legal battle ending is good news for them, and they are gently having institutional backing. And with the technicals of XRP, these are assets that on the short term is well structured for a price continuation and will probably, it should outperform Bitcoin, because I think Bitcoin should have some downside spill.
All right, Gilbert, good picks. We'll keep watching those picks to see how they actually do perform. Thank you so much. Enjoy the weekend.
And you too.
All right, so Ini, there we have it. It's MetaNep and XRP for Gilbert at this time. That's what he's buying. So I guess that's what we should be looking at.
Yeah, but we should also tell investors
not financial advice,
exactly,
please.
Exactly, very important.
Do your
Thank you so
own
much.
research.
I wish you a green weekend.
Yeah, it better be green.
All right, we'll see at 1:30 for Business Incorporated. Well, that's where we also draw the curtains, not just for today, but for the week. 5 days of current and relevant business conversations. I know it's been profitable for me, and I hope it has been for you. We'll start off again on Monday, God's grace. But remember, tomorrow, Saturday, Will Ibong will be here to give you a summary of what has happened in the markets all through this week. And Ladi will be here at 1:30 for Business Incorporated. I'll see you on Monday, God's grace. Have a profitable weekend, I would say, even though you should try and rest too. I'm Ini John Mekwa. Have a great day.